Greetings, friends. This is Chris Batz, and you're listening to episode number 22 of the Future is Bright podcast. In today's episode, I hosted my first LinkedIn Live event with Gary Miles. He's a seasoned and accomplished legal recruiter working with partners, groups, and firm mergers. We discussed several relevant topics, including the Allen and Overy Sherman Sterling merger, plus other recent merger activity. What does a successful law firm merger look like? Future trends for corporate law firms, such as private equity involvement and the ABA Rule 5.2, and so much more. If you haven't already, please subscribe to this podcast and leave a review on iTunes and YouTube. Welcome, Gary, to the Future is Bright podcast. It's great to have you on the show. Can you do me a favor, Gary? Let's do a quick intro. What are you up to? What is Miles Partner Placements? Provide a little bit of intro.
Well, Gary Miles, obviously, of Miles Partner Placement. We are what we would consider ourselves to be as an elite, high-level partner placement, group movement, and merger boutique. We focus on strategic, helping our law firm client partners with strategic growth initiatives and impact hiring. And we work with our partner candidates, sometimes large groups, small, large groups, to move teams of attorneys to a better situation. That's kind of what we're focused on, and we've actually had an extremely busy year. Had some really high profile placements that can be found on our website at milespartnerplacement.com. And we're just trying to continue to do that. We are currently involved in some combination discussions with firms of different sizes at varying levels. So it's good timing to have this conversation.
With that being said, Gary, and things seem to be heating up with consolidation continuing to happen, and pullbacks from companies, and recession being rumored about continuously. Obviously, the big merger conversation taking place is Allen and Overy with Sherman Sterling.
Right.
Would love to just kind of hear a little bit of your kind of feedback around some things that you have seen from observation. Again, appreciate your time to share today.
Well, that's an interesting one. Obviously, we've known for some time, right, that Allen and Overy has wanted to really expand its presence, its footprint domestically here. And I think you're going to see that, quite frankly, from most of the large internationally based law firms as the economy and the marketplace becomes more global, and the U.S. being such a high legal spend, jurisdiction, so to speak. If you talk about the entirety of the U.S., I think you're going to see that. We saw Allen and Overy go pretty far down the road with O'Melveny, and for one reason or other, that one didn't work out. Sherman, has been kind of in the news, for the past, year or two in terms of maybe looking to potentially attach itself and merge with a larger entity to increase its footprint. There's been rumblings in the news, and we've seen departures over the past few years. So it makes sense to me that those two entities might, look at a combination. What I find particularly interesting, it seems like, and I'm trying to think about this, it's become over the last couple, 3-4 years, it's become more common for these types of conversations to leak or get to the media in advance of, earlier in the process and in advance of actual deals being done, finalized, letter of intent stages, through partnership votes, etc. Having been experienced working with a couple of firms over the years, one of them I still work significantly with, Reed Smith, and at the same time for years Bingham McCutcheon. Both of those firms, if you chart the history of their growth, were heavy into and quite experienced in the merger game, right? Like they both made significant acquisitions, multiple acquisitions. I think Reed Smith has probably done 7 or 8, what I would term successful mergers. Um, where they have high degree of retention and penetrated a market that they weren't in or were weak in, both domestically and internationally. Bingham had done a number of large scale mergers itself, medium and large scale mergers, including one that I was involved in back in 2008, 2009 with the acquisition of McKee Nelson. Um, One thing I can say is I don't ever recall those firms, combinations hitting the media before letter of intent. The earliest was letter of intent being signed. With Reed Smith, you wouldn't hear anything until the deal was done and the start date, was announced, right? And so it's it's intriguing to me now that so many of these combination discussions are hitting the media as early in the process as they are, and you know how firms are not controlling the information flow and the messaging around that a little more, a little in a more experienced manner, if you will, because I can't imagine that get when it comes to the press and everyone hearing about it before that deal's actually so far baked that it's pretty much done. That doesn't benefit anybody that's having a large scale merger conversation.
And it seems like there has been some of those preempting leaking in the media, and the deals just kind of fall through. Maybe they weren't baked enough, as you're kind of insinuating. Um, so let's talk a little bit, Gary, around successful and not so successful. I think you're talking a little bit and hinting towards the important steps that are involved in these to be successful. Anything from your experience where you find mergers to be more successful than others?
Um, One, I think for mergers to be successful, there really has to be a strategic reason on both sides that is well thought out by both parties, regardless of who makes the approach to whom, right? Whether it's the entity that's looking potentially to be acquired or the acquiring entity trying to say, hey, we need to get into this market. Here's a target firm that makes a lot of sense for us, and that I think really has to be thought out well in advance of any conversations. Okay. Um, Additionally, I know from what's happened in some of those situations where I was aware of things going on, there's a lot of socialization work that has to get done in the process leading up to the finalization points where you have partnership votes, etc. Okay. One thing we see with the Allen and Overy and Shearman combination, at least as it's being reported, I have no involvement or insight outside of what's been reported. But I've seen some of the great reporting from across the pond in international journals and some here domestically. Um, it the I remember when it was first reported that this was going to happen, that the finalization date was before now or right around now, and now we're seeing reporting that the managing partners are going to go out on basically a road show in various offices across the platform, presenting, selling the concept to their respective partnerships, right? Um, I don't know, I don't have any specific insight as to this, but I think firms that have historically done mergers well and done them successfully have gone through that, as well as key practice group meetings and all of the stuff that you have to do, in terms of pre-integration steps to set up the best chance for success, the best chance for the synergy of the merger to actually in a quicker fashion take place, right? I think most of that gets done historically before the masses know what's going on, right?
Yeah.
And it's curious because of seeing some of, and again, some of this is just speculation from my own experience, but seeing certain types and levels of partners depart from various entities on various of these entities involved in this conversation, leads me to believe that maybe the information, wasn't shared amongst the partnership enough before now we're having this road show, right? And I've seen it reported. I mean, some firms have really high bars in terms of partnership approval to get a merger consummated, right? And I think I read somewhere. Correct me if I'm wrong, but I thought I saw 75% at Allen and Overy, amongst their partnership. And I don't know what the number is with Shearman, but then I also remember reading something where Shearman is going to have to bring in even former partners to vote because they have a pension situation, right? And so which leads you to believe that there's some wrangling over how to address that issue. That's always a sticky issue when you see firms combined that don't have like the exact same kind of model, right? So, I mean, I do think that I do think that that's when you look at some of the successful mergers, and I term a successful merger from my perspective. I'm not using some sort of defined industry standard, but high level of retention over time of the firm partnership that was brought on. Um, Increased metrics from the combined entity over time. Doesn't necessarily have to happen the first year because there's some work, but if you look over a 5-year look back, where is the combined entity now? And then digging deeper, and I've actually had experiences of finding this out with respect to stuff that I've been involved in that successfully has closed, as well as respect to, you know, client firms who have integrated other entities where I was not involved, but years later can point to the data examination, data analysis that shows how much better the acquired entity is doing metrics wise in terms of how they fit on the firm's platform, right? And firms that do this well, like they have that whole playbook and post merger analysis, you know, right there. It's part of their database, right? Part of their systems and structures. So, again, I think it's really intriguing what's going on in the market now. I mean, we take another merger that's been highly public, right? And the Strzok, what was reported as the Strzok Nixon Peabody combination, and if I'm not mistaken, that was I think the second time it was reported. That there was. I feel like there was someone announced that it was announced earlier that Strzok was in talk with someone else. I know that it's been reported that there was multiple suitors, but you know, I'm always wary when something hits the press early and it says merger will be done by X, and I'm like, oh boy, here we go, because I tend to think that a lot of those issues haven't been worked out, haven't been worked through, and have not been socialized between both groups of firm partnerships. And nothing's final until it clears the partnership vote at the end of the day.
Yeah, it really is. Well, let's take a couple of minutes, Gary, and discuss. So, a shout out to Fairfax Associates who've been tracking mergers. They've been noting quite a bit over the past several quarters, and even last year, it's very busy on the kind of middle market side, smaller regional firm side of mergers versus the big massive ones we've seen.
Agree.
And there's been some notable ones. There's been some that actually have created AmLaw 200 firms. So, and I'm going to just quote from one of their press releases here. Yeah, so Maynard Nexon, two Southern firms. So Maynard
Yep.
Cooper Gale combined with California's Nexon Pruitt.
Yep.
They are now 23 offices, 550 attorneys. Um, and yeah, another big combination, Smith, Gambrill, Russell with Freeborn Peters
Mhm.
out of Chicago, those guys
Yep.
combined. Um, and it continues to create, and obviously there's a lot of AmLaw 100 and 200 acquiring smaller offices.
Right.
Um, and I mean, just there's a lot of merger activity going on.
Yep.
Lots and lots of firms. Speaking of the larger firms acquiring smaller firms, Quarles and Brady acquired, Venable acquired, um, Frost Brown Todd acquired,
Yep.
Clark Hill
Womble.
acquired, Womble.
Womble's made a couple of smaller or medium sized acquisitions. There has been a ton of acquisition out there, and I do think it makes a lot of sense. I mean, I think that in this as the client market, global goes further and further towards globalization, right? Like I do think that smaller entities that are limited, whether it be in geographical footprint or whether it be in breadth of services and depth of capabilities in those services that they can provide, are consistently going to be faced with the question, do we need to get bigger, and how quickly do we need to get bigger, and what's the best way to go about doing that, right? I think, for all the reporting that's going on about the AmLaw 200, is it the new AmLaw 100, and our regional shops, post COVID and post pandemic, are they better suited now to garner larger shares of their clients' wallets? At the end of the day, as client companies grow, expand out across the world, their legal needs become more sophisticated, more encompassing across a wider swath of services. And I do think every, regional or smaller or mid-sized firm is consistently wrestling with, do we need to get bigger to maintain our clients, let alone increase our client wallet share? And, at the same time, from the flip side, I think you have, anything from what I would call a mid-sized national firm, right? Like an AmLaw 200 firm, to even bigger firms. I know at the executive level, leadership is always saying, how can we get bigger? How can we significantly change in a positive way our top line revenue? Whether
Yeah,
that's recruiting significant groups. If you talk to most law firm leaders, even though they all do it, their firms all do it, law firms are like, look, the onesie twosie approach to recruiting,
yeah,
while we get good talent sometimes, it's
not moving
not
the needle.
moving the needle for where we need to go, if we need to ascend in profitability, if we need to
Yeah,
grow our profit pool. Because at the end of the day, every law firm leader in a very competitive market is saying, how can we increase our top line revenue so that our profit pool is larger, so that my
yeah,
partners are happier and I have better flexibility to take care of my outlying rainmaking partners, right?
yeah,
Like, this
yeah,
is all part that's baked in. And I think what you're seeing in the law firm world is catching up to their clients, right? There's consolidation happening every day. Law firms depend upon it, right?
yeah.
In terms of revenue in businesses. And I think you're seeing the same thing with law firms.
So a couple other big announcements that took place. It was the first quarter. So you got Holland and Knight acquiring Nashville's Waller Landinson. That was a
Yep.
huge acquisition, and you got Oric picking up Buckley, and that was a
And,
huge, uh, noteworthy. Both of them
and
acquisitions, very well known.
And I think so. And it's going to be interesting because the jury's still out. And that actually was Holland and Knight's second large scale acquisition, I believe, like in the last 18, 24 months, right? Because they also
Oh,
did
Thompson
Thompson
and
and
Knight,
Knight out of
Texas, that was
Texas, right?
huge.
Right.
Yeah,
That
that
was
was a
a
big deal.
200, 300 something,
Hmm.
maybe even 400 lawyer acquisition, Waller. But I think if you look at both the Buckley and the Waller acquisitions or combinations, right? You can really, from the outside looking in, see the strategic strands from each side as
Yeah.
to why potentially those combinations make a lot of sense.
Yep.
Okay. Now, we won't know. The data won't be out until 3, 4 years down the road, right? But it's uncommon to see a firm do what Holland and Knight did because you're really talking about almost not quite doubling its size, but between Waller and Thompson and Knight,
Yeah.
Holland and Knight probably grew its head count by about 30, 40%
Yeah.
over the last
Substantial.
2 years, right? And so, and to be able to digest all that, integrate all that, and achieve positive, let alone maximum results, that's the trick. That's the question. But we can say this. I don't, correct me if I'm wrong. You've historically been in the Southwest, right? You may keep better tabs on this than I do. I try to stay current in all markets. But for example, Holland and Knight, I don't believe a whole bunch of the Thompson and Knight folks have left. Like I think they've had a pretty good retention number now going on almost 2 years maybe, or slightly more than 2 years. So that's looking like it is off to a positive start, right? The revenue growth is obviously noticeable. If they can pull off the same thing with Waller, and you understanding about Holland and Knight and their focus on private equity and healthcare, and some things that Waller was totally rooted in, and then wanting
Perfect
to,
fit.
right? It looks like a really good fit. We never
Yeah.
know if it's perfect, but it looks like a really good fit. And only time will tell. Likewise, you can see absolutely on the Buckley or from the Buckley Oric situation the same types of dynamics. It's early to tell, right?
Yeah.
Because that merger was actually just completed, like Waller, this year, right? I think it
Hmm.
was January or February this year. So we're really early into it, but at least from a practice alignment, expertise alignment, you really see strategically how those two firms, Buckley and Orrick, fit together, and expect that if they've done the work and continue to do the work, that they have a really good shot of making that a very successful combination on all sides.
Yeah. One thing that's probably worth noting, and I want to repeat from clients I've spoken with, firm managing partners,
Yeah,
is this notion of they think that all the work is wrapped up in finding the right suitor, the right firm to merge with, and they think
right.
that's the work. Whereas that's actually the easy part. The hard work is the integration.
No
That's
question.
when the work really starts to see if the success, as you put it, Gary, actually works, if
And
it actually makes
And so
sense.
this is where firms, I think if you track, and I've never sat up and really done a data-based comparative analysis of my own on this, right? Even though I've been involved in these types of conversations going back to like the beginning of my career, 2007, 2008, right? So, but I will say that again, those firms that have historically been firms that have grown through combinations, like the Reed Smiths, like Bingham was. There's some others out there, right? They what if you're on the inside, you see that they have playbooks for the first part of it, right? Identifying and getting through a combination finalization, and then an entire playbook and infrastructure set up to maximize integration, right? And I think that a lot of firms who historically haven't been, you know, combination based growth firms might underestimate
Yeah.
the amount of work that takes place both leading up to, but then certainly afterwards, and whether or not they even have the infrastructure in place to do it,
Yeah.
and what they have to do to put in place that infrastructure. So it is that's why we've seen so many unsuccessful mergers, right? Like, and again, a lot of that is from the point of view from which you look at it. Like every firm would say, "Oh no, that merger worked out great for us." Well, I could point to, I don't want to put anybody on blast, but I could point to
Yeah.
7, 8, 10 mergers where 70% of the head count is gone after the first 3 years
Yep.
of the acquired entity. Then it begins to look like, you know, a totally different animal where you're really just doing what some firms have been doing too now. The one thing we haven't really discussed is, you know, there used to be a strategy, and I won't put any blast, but those legal recruiters that followed mergers and merger discussions, there was a very successful chairman of a top firm who was, kind of had this MO of getting into merger conversations, never finalizing, but poaching significant groups after those conversations, right? And did it quite well. Um, the I think what you have now is you also have the third element of what I call the or another, let's say not third element, but a divergent leg where firms are saying, okay, is there a way for us to maximize exactly what we want and do the white knight savior thing where we don't take on the whole entity, but we bring in, and we don't even do it under the legal structure of a merger. We do it as a large scale lateral group
Move.
acquisition of
Yep.
200. And I think the most glaring recent example of that was obviously the Morgan Lewis
Bingham
acquisition of
McCutcheon.
the Bingham folks, right? But there's been others. There have been others that were done that way,
Yep.
where it wasn't actually a merger of two different entities, right? So um, I think that's also something that we're going to see more of, because we are seeing some, and it's been reported, there is stratification, right, in firms in terms of financials and how well they're doing, and when firms get into talks. And I think when firms get into talks where they are somewhat distressed, that sometimes may be a better option
Yeah.
than actually going through a merger, right? Because you might just get around some of those hurdles. Sorry, go ahead.
No, and I agree with you. I was just thinking of another example where, like LeClaire Ryan, I believe Louis Brisboe picked up the largest amount of attorneys from that
Yeah,
situation. I don't know if it was a full-on merger convo, because I know
yeah,
there was different conversations taking place with them to see if they try to make something work.
right.
But as far as headcount moving, I think Lewis picked up the largest
Yeah,
amount. But
yeah,
man,
yep,
those rescue plans that take place, whether the entity that's kind of going down has got debt that's a bit toxic,
yeah.
and people trying to pick up and bring the assets over the headcount. Um, Gary, let's pivot for a moment.
Okay.
We've been kind of jumping, and I wanted to um, I want to talk a little bit about kind of more of the nuanced areas of what's taking place, what we're seeing right now. So there's virtual law firms, there's things taking place overseas. We see big accounting growing their headcount with lawyers, actually legal entities taking place overseas. Um, there's private equity money that's we're both getting wind of, have conversations already, you and I, about this actually happening.
Yep.
There's law firms going public, which isn't a big thing taking place in the United States, conversation
Right.
related, but it's
Yep.
definitely a reality and an experiment overseas.
Yep.
There's ABA Rule 5.2 that's being heavily looked at, investigated, kind of sandboxed in certain states. What can we do to make company or law firms take private capital, which is um, causing probably a lot of private capital in the United States salivate over. So,
Mhm.
um, would love to hear some of your initial thoughts around that. I'll jump in and chime, but yeah,
So that's, and I've been saying, because you and I have talked about this, but I've been saying this
yeah,
for a couple of years now, that I think eventually there's a good possible, no one knows how it's going to play out here domestically, but I think there are indications that you're going to see private cap. Let's take private capital first, okay? You're going to see private capital, i.e., private equity companies, try to do in legal what they accomplished in healthcare over the last 12 to 15 years, right?
yeah,
Like, you go back 12, 13, 14, 15 years, like, it wasn't private equity was not so prevalent in healthcare like it is today. You can't go to a doctor anywhere, pretty much for the most part, that is not, backed by some or owned by some either portfolio company of a private equity shop or private equity backed directly, right? Like there's smaller funds investing in physicians groups, et cetera, right? So um, I don't expect that to be any different in this industry, right? I think there's some different hurdles that have gotten around, but we know that there are already law firms out there that have done the ALSP thing and are positioned under certain state laws to have financial backing,
Yeah.
right? And by non-lawyer, led entities. We see the whole litigation funding thing, right? Like that litigation funding thing was kind of, if you will, a bridge, I think, to that further kind of help break this down. And so I think we're going to see nothing more. Like it would not surprise me if there are even large national name brand law firms out there that we don't know of that are already looking or in discussions thinking about arranging having that sort of arrangement. Okay, number one. And then with the other side of it, we also know, I know personally that there are, innovative law firms where people have broken off of large, big name law firms, started their own, whether it's a virtual firm, whether it's a hybrid firm, whether it's, some sort of alternative firm where, like their company clients, they're thinking about is there a wealth exit, opportunity at some point with even maybe public ownership of law firms like we currently have in Australia. I think we've started to sniff it a little bit in Europe, right? And in London, where
Yep.
there are firms going
It's
through that
happening.
process and happening. Um, you know, I think that's a little bit of a larger mountain to climb, but I don't see, why if it starts to happen around the world, the more economic our economic environment globalizes, I think the more things will assimilate in various parts of the world. Like money is going to find a way
And
into
well,
investing in very stable, revenue producing, businesses, and law firms are that, quite frankly, right?
yeah.
I mean, so it would not surprise me at all if and I just don't have a sense of what the time frame is going to be, what the impact to our industry is going to be. Like, those are all fascinating questions and conversations.
So I know I've been tracking this for quite some time and having guests on the
Yep.
show for some time around these topics, and I love to
Yep.
bring it up and ask folks around this because, um, you know, uh, American Lawyer magazine back in 2011, I think it was, produced an article that said, "What if? What if X law firm went public?" And it actually walked through
Yep.
the possibility of what it would look like for some law firm to cash out their
Yep.
partners on going public. And it was detailed, it was well done, and I don't think that was the precipice, but to your point, Gary, like money's going to find a way. It is finding it through the inefficiencies of law firms when you got consultants and ALSPs figuring this out with Axiom stepping in and starting to eat other law firms' lunches, and the collaboration of creating more efficiency and more productivity and truthfully serving the client better. What happens with consolidation and those natural effects, and you throw capital at something, and what does that do to competition? What does that do when law firms are being forced to merge because more headcount means more revenue and they have more capital to work with to do what? Acquisitions,
Well,
to do
you got
technology, to afford talent. But if you got this dry powder that comes up to you and says, "Hey, we can help you and we can help you leverage and grow, but these are the metrics and this is the song and dance we're going to dance towards, and we're going to encourage you to consider." So it's going to be fascinating. So I got wind about a law firm in Europe that has received private capital, and they are now acquiring law firms across Europe.
Mm.
And I was approached by a group who said, "Hey, we don't want to be a part of this. What can we do?" And so the reality of the progression or the progressive nature of professional services in Europe, particularly like the UK with the ABS structures that are created that now can take private capital or go public, and you got Australia doing the same thing. They're also have law firms that are going public.
Yeah.
Um, our country is going to wise up, and the lawyers will begin realizing, even though, like with the Wall Street Journal saying, big law partners are making more money than bankers, they're going to say, how can we make as much money as VCs? How
Yeah.
can we cash out on these shares?
Yeah.
It's going to
Yeah.
happen. And
So there's one thing I'd like to jump in here because I
yeah,
agree with you, but I think there's one mountain that's going to be really interesting and difficult to climb in the U.S. Okay, and unless certain laws change with respect to the conflicts landscape, I think, and I think this also, by the way, swings over to the you also raised another element of this, like Big Four, right? And that's been talked about for a number of years now, right? Where
yeah,
law firm leaders are like, oh no, Big Four is a threat. Um, but I actually think that the biggest problem that stands in the way of the U.S. moving quickly to what we're starting to see in other places is the issue of how do you avoid under our federal and most state laws the conflicts and the conflicts issues if you have such a wide variety of investors, owners, what have you, when and this would pertain, I think, even more. It could even be more impactful against Big Four here in the U.S. Is that think of any Big Four. Think of all the thousands of companies that they do, taxes, audits, all that stuff, right? M&A. They're involved in all of that, right? Have their hands in all of that. But as you and I have learned in our vast experience of recruiting partners and groups from one firm to the next, a lot of times what gets in the way most often of deals is either the outright adversity or the quote unquote, major client business conflict that
yeah,
often exists where one company X says, you can't represent company Y, our biggest competitor in this industry vertical. And what happens, on that side of the ledger, I'm not saying this stuff can't be worked out or revisited or changed, but what happens when you know Big Four or private equity or whoever is behind a firm and that private equity company is invested in both Coke and Pepsi, right? Like, and you could think any other industry program. I just picked that one because we know historically that those two companies have been very, very, you know, uh, um, vocal to their counsel about if you represent us, you can't represent them, right? It happens in the airline industry. It happens in, cross industry. So I think that is a question that will, and again, this is all fascinating, but it's a question that will, I think, really be at the heart of how quickly some of these changes. I inevitably, like you, feel that money. I mean, look, in our country's history, money usually wins out, right? Capital will find a way
yeah,
to win out. It's just how does it get there? What's the timetable? How does it change the structures that operate within that industry after it gets there, right? And
yeah,
that's really what I think keeps some law firm leaders are thinking about it all the time. I think about, I'm sure you do, like how in terms of trying to prepare for the future as doing what we do. How is this going to impact our industry, right? Does it change our fee structures, etc., right? Because there is change coming. you know.
yeah. Significant. And when we talk about timing, I personally think it's going to happen in this decade. I think we are going to see a real needle moved. Is it going to be late 20 something that California or New York will start experimenting or accepting some
Yeah.
of what's taking place here. I think that those states, Illinois, maybe Florida
Yep.
or Texas, but particularly New York and California are going to be
Yep.
significant.
Yep.
Um, yeah, I think it's interesting because there is so much money in the private capital side of things,
Yeah.
and with the retraction of the market, with the interest rates going up, they're going to try to find ways to get more yield on that
Yep.
money. And where are they going to go? They're going to go where there's substantial profit,
Yep.
and law firms tend to be in that place where they have yet been touched. So
With consistent revenue and
yeah,
consistent profit, right? Like
it's
if you
true.
think about it as an industry, just like I'm sure they thought about it with healthcare, right? There, you look at it. If you were, I'm not a big private equity principal at one of the top 10 whatever private equity funds or even a middle market, but you could look at it and say, yeah, like this is a pretty safe bet if I'm going to invest my money, if I can get my money in there for a return on investment, right? At the end of the day.
Um, Gary, question for you. What are
Yep.
some of the best ways for people to reach you?
Well, I'm always accessible via LinkedIn. I'm always accessible. My website is milespartnerplacement.com. You can email me at garymiles@milespartnerplacement.com. And I have all my contact information on my website anyway, me and my team. And those are probably the best ways to get in touch with me if you'd like to talk about these things or have any other needs that you think I could be helpful with.
So, Gary, I really appreciate your time. I'm so glad this worked out, despite technical challenges that we had, completely. Um, uh, Thank you for your time. We'll do this again, and much success to you this year.
Thanks a lot, Chris. Same to you, and I really appreciate you asking me to participate in this. It was fun, and I look forward to doing it in the future.